Good afternoon. This is Chris Brecher with Simpler Trading. Just want to do a short little video for the night of 12/27/2022. This is what I'm looking at. I'm looking at the divergence, big divergence on the upper left. ES down 14, NASDAQ down 162, and the YM, the Dow Jones futures up 47. We've been having this divergence for a long time, mostly because of the bond market. So the bond market rallied to where I thought it would rally to, which was right to the prior sell-off. Then it had this negative divergence we call successive lows in the MACD versus successive highs in the product. Three marching lemmings shows a loss of momentum. Then what we saw in here was this on a weekly. The bonds were up here. Overbought at resistance. That's a recipe for disaster. Now, the thing is the whole reason the overall markets have been selling off this year is because the bond market's been selling off this year. You can get a 4-month note and get 4.5%. So it doesn't take much bad news for overall markets to go down because investors can get a lot elsewhere. The S&P 500 yield is about 1.7. And in 4 months, I can get 4.5. Now you understand why markets are having a tough time, especially the NASDAQ stocks. The reason for that is many NASDAQ stocks are valued at price to sales ratio. Their forward earnings or expected earnings get hit when interest rates go up. So when the bond market has a bad day like it did today, usually the NASDAQ underperforms, which is exactly what you got. The problem is usually when the bonds go down this much, the ESs also go down. So I'm going to show you a couple of things of how there's a divergence and how it might play out. The first thing is definitely notice this bond market overbought on a weekly. Guess what? The ES was overbought on a weekly, still is somewhat, and the NASDAQ was and acted terrible. So this is what I want to show you. I'm going to show you, I call it a bubble view. I'm going to show you the relative prices of where they are using TradingView. So when you go into TradingView, this is the Dow Jones futures. I'm going to make it nice and big for you here. And what you're going to see over here is that right here, right there at that reversal was December 23rd. That's the Dow. As you see on the right, if you look at it, and I'll make it an hourly chart, that's down here. That's a long way. That's like 500 points. It's not the end of the world, but that's where it is. Now take the blue bubble on the ES. Same kind of thing. Down at this level, about 38.20. That's only about 36 points lower. Just keep that in mind. Now the NASDAQ. It's all the way down to everything down here. That's December 22nd. That's December 23rd, and so on. The ES on December 22nd was all the way here. So if I'm going to take another bubble and put it right here, but I'm going to make it red. Make that red, like danger sign. There you go. So as you see, that would be under 3,800. When you take the NASDAQ, it's already there. I'm just taking that to that. So the ES is up here. The NASDAQ is down here. You can see it really clearly on the right on an hourly chart. Check that out. Yeah, it's the same place. How about the Russell? Yep, look at this. That's your red line right there. And it's up at the blue already. So the whole point is the YM is way up here. That would be all the way equivalent to that, which is a long way. That's about 700 points. The problem is that right now at the end of the year, things get wacky. You get rebalances. It's relatively thin. So it's really tough to gauge it. But all things being equal, this is the way I'm looking at the markets. I'm watching the ES. I'm watching the ES, and we're talking about these successive things here. But then all of a sudden it dawns on you, heck, that's a big old trend line. It sure is. So if that breaks, you're talking about down to the blue line. If that doesn't hold, you're talking about to the red bubble. So go back to the NASDAQ. Yep, that's already broken it. It's all the way down here. How about the Russell? Darn right, it's got this, and it's barely at it. You could say it's broken it, and you could say the Dow hasn't come close. So what would make me more certain that the ESs are a higher probability short, because they haven't been, or the Dow has? The biggest thing I'm going to be watching is if the NASDAQ goes to the point of no return. Now, what does that mean? It means that the NASDAQ goes so far under these red and blue. So it goes all the way to here. All the way to here. If it gets beyond the point of this red and blue bubbles and gets under here and goes all the way to here, you're talking about November 4th. I'm not saying the ES goes to November 4th, but I think it's likely that the ES gets to the red bubble. November 4th would be way back here. Lots of down here. YM, same kind of thing. November 4th is down here. I'm not saying it's going there. I'm saying that it's more likely to go to here if the NASDAQ overshoots. So the first thing we're going to be watching in here is definitely the bond market. Is the bond market going to hold this support? I drew these arrows before the opening. Look at that, right at support. If this holds and bounces a little, maybe you get the NASDAQ outperform the ES. But at the moment, as you see, red and blue bubbles, that's what I'm watching tomorrow. I'm watching the NASDAQ. That's my lead tomorrow. Is the NASDAQ going to get all the way down to here? And then I think you get the ES at the minimum go to here. So thanks for listening. Hope this helps, and we'll see what happens tomorrow. Let the NASDAQ be your guide. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me